Welcome to my channel where we help investors compound their way to financial freedom in 5 to 10 years. Today we're going to talk about Bitcoin. It's looking like a top is in, and I'm going to tell you why it's very likely we're going to see a sideways to down movement for at least 4 to 6 weeks. Now, before we jump into the technicals, just a quick reminder. W.D. Gann, one of the forefathers of technical analysis, said the following: a successful trader and investor studies human nature and does the opposite of what the general public does. Fear, uncertainty, and doubt, fear of missing out, all of those emotions drive the market. It's crowd psychology. And that's what we're going to do. We're going to simplify crowd psychology using a few different factors. First things first is Elliott wave theory. Markets tend to move in fives and threes, and after a five-wave move to the upside, typically what occurs is some type of correction. We're going to look into that in a lot of detail. So we're going to go macro first. We're going to really look at the big picture. And then I am going to go into a lot of detail on how we could potentially short Bitcoin over the coming days and weeks if certain things happen. And we want to minimize our risk and maximize the upside potential. So with Bitcoin right now, there's a couple of things. I'm on a weekly chart. And what we can see here is a 1, 2, 3, 4, 5, right? That's pretty much clear as day, right? You don't get much better and much clearer than a five-wave count like this. But what other information can we use that's going to help us to see, is this likely going to be a top that's going to last a number of weeks? Well, I have a momentum indicator on the chart over here, and it's called the stochastic RSI. There's thousands of indicators, but what I want to bring to your attention is how reliable this has been to pick a top, as in it's married up pretty nicely, and then it's been 1, 2, 3, 4, 5, 6 weeks of sideways to down. Top, married up nicely, and then we've had 1, 2, 3, 4 weeks sideways to down. We had a top in this zone over here, and then we had a 1, 2, 3, 4, 5, 6 weeks sideways to down. What do we have right now? Well, it hasn't turned bearish yet, but next week it's probably going to turn bearish. Like, this is literally Saturday as I'm filming this. So by Monday, this is probably going to be bearish. So what should we anticipate? Some type of movement of sideways to down for how long? 4 to 6 weeks. So what does that mean and what does that look like? Well, let's just look at the macro first before we go into a daily chart and go into a bit of detail. So let me just drag this to the side. I've drawn a few ratios already. But the main thing is 6 weeks. Where does that take us? Well, 1, 2, 3, 4, 5, 6 takes us over here. 6 weeks is over here. What's the date? We're talking about towards the end of May. End of May. So we're probably going to be sideways to down. How much of a movement, if the sell-off occurs, how far should we anticipate? Well, it's probably going to retest this low over here. The wave 4 low, the $20,000 range, more than likely. So that's what we're looking for. But what will be a clearer signal that the bottom is in, or the top is in, and then we're going to see some type of movement to the downside? Well, let's jump into a daily chart to get some help. So I've done some technical analysis on the daily chart, and what we have is the red we've articulated already. The green count is potentially another 1, 2, 3, 4, 5. Now, markets, the way psychology works, remember what W.D. Gann told us, right? A successful trader studies human nature and does the opposite of what the general public does. So generally, when you see a five-wave structure, this is where panic buying sets in, right? Panic buying, fear of missing out, and people think the market is going to continue going up. But typically at the end of a five-wave move, when you've had a really clear wave 1, a wave 3, and a wave 5, this is where profit taking tends to occur, and then the market starts to move to the downside. That's most common and most typical, and you'll see it time and time again in all markets and all time frames. So when I'm looking at this, I'm going to go into a bit of detail now. So just I'm going to hopefully make it as clear as I can. There's 2 real scenarios that are likely to play out, right? And I use the term likely because we never actually know what's going to happen. We can only see what's highly probable going to happen, but then be really clear on what information or what does the price need to do to confirm an early signal that the market is going to do what it's going to do. So the key thing is the 2 scenarios is this and this. You go, Jigir, what's the difference? Well, it's really this intricate information. It's potential that this might be a wave 4 or this might be a wave 4. So I'm going to play devil's advocate and play out both scenarios on what will confirm that the market is, the top is in, like we're going to be really, really confident that the top is in, and then we're going to see some type of follow through to the downside. And that's what I'm going to talk about now. So I do need to go into a little bit of detail. So it is what it is. So I'm just gonna speak it out and hopefully it makes sense. So this part here. So if this is a wave 4 over here, this is scenario A. Or I'm gonna call it scenario B actually. A 1, 2, 3, 4, 5. Or this over here is a wave 4. And what we actually have is this blue count, which the 5 is already in. I'll clarify this in just a second. Right? So this is why I've written the term 3 or 5. Now I'm trying to be mindful that I know I'm going technical. But it just is what it is, right? So with Elliott wave theory, what we're going to do is we're going to use other information that's going to help us. What are some of the other pieces of key information that can help us? Well, one of the key things is the momentum position. We got the daily momentum bearish and overbought. What that means is it tells us we're probably going to see at least some short-term movement to the downside at least. But if the price, and it is an if the price of Bitcoin closes into this closing range, that would be ideal in terms of if we're expecting a follow through to the downside. So 28,400 would confirm this wave count. And then we're probably going to see a bigger move to the downside. An earlier signal would be a close below 29,660. If the price closes into this range over here, that will give us some confidence. Now, if you're totally new to technical analysis, Elliott wave theory, we actually have a service where we actually do this for you. We're going to be announcing that in the coming weeks. We've got some very exciting stuff. But if you're getting value from today, like, subscribe, hit the bell notification, and let's now just dive into a little more detail, but this will make perfect sense to you on what I'm talking about. So I'm just going to finish up on an hourly chart. And there's some key information with this psychology of buying and selling behavior. And I'm going to try and simplify it. So the scenario A or plan A, my thesis right now is that the top is in, right? The top is in. So I want to know what information would void that and what is the minimum that should occur and is likely to occur even if we're wrong. So what we can really be clear about right now as of this moment in time is when I zoom in to this 60-minute chart. And I just want to show you that when we're talking about crowd psychology and human studies or human nature, it applies to all markets and all time frames, right? And what I'm going to share with you here is a key piece of information that should help us make some money from the markets, but also we can be patient for a high probability setup and only take the trade if the setup is in play, right? When it's really, really clear and really, really obvious. So what I can see right now in front of me is this move on Bitcoin, a first move down. We've had some type of correction, and then we've had an aggressive move down, and it potentially looks like some type of correction. If, and it is an if we get a follow through to the downside, then this looks like a wave 1, 2, 3, 4, 5. Why is this important? Well, this is an impulsive move to the downside if this part happens here. Now, I wouldn't trade this. You can trade it shorter term. But then what I would look for is some type of three-wave pullback. Right? It's my favorite, which is called an A, B, C zigzag. And at this point over here, this is a high probability short trade for at least one more leg down. And I just want to share this with you. And again, I know it's a bit of detail, but sometimes the money's in the detail, right? But we want to keep it as simple as we can so it's practical. So we're gonna talk about that as well. So how I'm playing this is I know there's a reasonable probability that this could be a wave 1, and this is in fact a wave 2. And what I've got drawn as the blue 5-wave move to the upside is potentially a wave 3. That's why I've written this up here, a 3 or a 5, right? So if it is a 3, what should the market not do? Well, in Elliott wave theory, there's this rule. There's 3 rules, and there's only 3 rules. And if you learn these 3 rules, you can see stuff in the market that others can't see, which gives you a competitive advantage, which is known as an edge. And you can trade that edge and beat other players. That's what you're looking to do. And what is the thing that a wave 3, 4 should not do that confirms information for us? So let me simplify what I'm going on about. I want confirmation that this is a wave 5 and not a wave 3. One of the Elliott wave rules is that wave 4 should not close into the range of wave 1. Wave 4 should not close into the range of wave 1. So if we're playing devil's advocate and we're going short, and let's just say the market did do the 5-wave move to the downside, did some type of ABC correction, and we traded it short, what should the market not do if this is a wave 3 and this is a wave 4? Well, the market shouldn't close into the closing range of this wave 1 or potential wave 1. And if the price closes below this point here, which is the 28,400, that then gives us great confidence that this is in fact a wave 5 top, and that top should hold for not even a number of days. We're talking about a number of weeks, maybe even a couple of months. Then we'll be sideways to down. However, and I do want to say this, however, we want to protect ourselves if the price doesn't close into this range, and this is in fact a wave 3, and this is in fact a wave 4, and then we get one more high to the upside. How can we protect ourselves? And this is the key. This is trade management. This is advanced stuff. But just because it's advanced doesn't mean it can't be practical and it can't be simple to apply. Because Leonardo da Vinci said, the ultimate sophistication is simplicity itself, or simplicity is the ultimate sophistication. So how do we play this out in our minds, or even practically? So let's just play this out. If, and it is an if, hasn't happened yet, I'm just waiting for it, is we've had this, what looks like to be a wave 1, it looks like to be a wave 2, potentially, it looks like a potential wave 3, it looks like a potential wave 4, it hasn't closed into this range over here, and we're looking for a wave 5, right? So I'm just going to wait. I'm not going to do any action. Don't want to really do anything short term. So let's just draw this in. 1, 2, 3, potentially 4 and 5, right? Let's put a question mark here. And just so we know our clear thinking. All right, what would I like to see next? I want to see a clean ABC correction, right? Clean. What would that look like? Well, it would look like something like this, right? I'm just going to quickly change this to the same color, just so we can see it clearly. And it's the same degree of wave count. I think it's a micro. Is it micro or it's a sub-micro? Yeah, that's fine. It's one of the same color and same size, right? Even the same thickness. It's just cleaner to see, right? Okay, so, and again, I'm forecasting a bit here, but this is my business plan. This is my business plan, and patient is going to pay us. It's going to reward us. So we just go, whatever we think about Bitcoin, let's wait for a high probability setup where there's going to be a decent movement. And we're taking that weekly momentum into account. We're taking the daily momentum into account as well. And there's a few other factors that we can play into this as well. If, and it is an if, hasn't happened yet, if this occurs, then at this point, right, I'll be measuring time, I'll be measuring price, there'll be some key ratios that we want to look at. If it plays out like this, then I'll look to take a short trade. We'll short this. And the short might be, it might be below this wave B, right? If the price goes below here. So what we expect as a minimum is this, as a minimum, right? And what we do, if this occurs, because at this stage, we may not know, unless it unfolds in a particular fashion, what it's going to end up being, right? We don't know. It's got a couple of, it's really two scenarios. And the two scenarios was what I said earlier. Hopefully you're still with me. I know this is a bit of detail, but again, it's like everything in life is difficult before it's easy. That's just the nature of life. If you're driving a car, if you're learning to trade, if you're getting into shape, everything in life. But it gets simpler. So hopefully you're seeing fives and threes, fives and threes, fives and threes, fives and threes. That's the most typical common behavior. And around 60% of the time, it's relatively clear. So what we're saying here is this could potentially be a wave 1, like we said before. Could be a wave 2. This could be a wave 3. But it could also be a wave 5. Now I'm trading it as if it's a wave 5, but I've got it in my mind that it could be a wave 3. Why is that important? Well, if this is a wave 3, what follows after 3? Well, it's a wave 4. What does a wave 4 typically do? Well, it typically does a minimum of 3 waves. It doesn't end in an impulsive 5-wave structure. And this point here would qualify as a wave 4. So then what we can do is become risk-free over here if this occurs. Because if it isn't a wave 4, just follow me with this. If it isn't a wave 4, we ask ourselves the question, what should the market not do if it is a wave 4? And what should the market not do if it's not a wave 4? Right? So this is the game, right? You have to kind of have the outcomes. And what you do, what this allows you to do, why this is important, it allows you to do something called tight risk management, money management. People generally are terrible at taking profits and are terrible at managing risk, right? People don't naturally understand statistics. I got a degree in mathematics. I love numbers. So I love numbers. I love probabilities. And if you can get your head around that kind of thinking, then all of a sudden you can trade in a way where you're like the casino, which you're not going to win every bet, but the casino has the edge and it ultimately wins. And that's just the name of the game when it comes to trading. So if this occurs, this could be a wave 4. So we go, right, let's exit some of our position as if this was a wave 4. What should the market not do if it's not a wave 4? In other words, if we're anticipating the market to continue to the downside, ask yourself, what should the market not do? Well, it shouldn't overlap back into this wave structure. So we could move our stop loss on the rest of our position over here. And now we're protected. So the worst case scenario, if the market moves to the upside and it does form a final wave 5, we've made money. So we're wrong and we've made money. However, but we're also in the market short if the other scenario plays out. You go, yeah, what was the other scenario again? I go, the other scenario was that this, in fact, is the final part of a wave 5, where we're talking about a particular, I won't re-loop again. Why is this important? Well, if this is a wave 5, what is likely to occur? Well, rather than it being some type of A, B, C structure, bear with me on this because I'm trying to make it as clear as I can. Rather than it being an ABC structure with some type of follow through to the upside, it ends up being a wave 1, 2, 3. And a wave 3 tends to be quite aggressive. And what will give us the confirmation that this is happening is if it closes into this range, the 28,400 range. If it closes into that range, Bitcoin, that gives us clear indication that this, in fact, is the top and the correction has begun. So there's the two scenarios. So if this occurs, when we do close into the range of 28,400 and we're in the market, we've traded this, we're still in this. Well, what should we anticipate? Well, what we should anticipate, again, I'm going to go a little bit intricate, but it's just the nature of what we do over here, is this move here will be more aggressive, more than likely. The wave 1 will probably be more like this. Probably be more like this. So what, in fact, ends up happening is a 5-wave structure. A wave 1, a wave 2, an aggressive wave 3, some type of wave 4, and then a wave 5. And then what we'll look to do with our position, I'll just make it in red just so it stands out a bit, is exit either in this zone or this zone, right? Ideally this zone, five waves. So what have we effectively done here? And I want you to get your head around this, because I think most people find this very difficult on how to think. They get too caught up in doing the technical analysis and forget the business part of trading, which is how to make money, how to let your profits run, but also how to minimize your downside, right? That's really, really important. So what we're effectively doing is saying, right, this is my thesis right now, I don't want to do anything, right? Don't want to do anything because it's too high risk right now. You can go for an aggressive trade right now, and I've done that as well, but there's pros and cons. It's more likely that you get stopped out. Instead, what we're saying is, let's wait to see if we do get a 5-wave move to the downside. Let's just say that does occur. What occurs after a 5-wave move, more often than not, typical, is some type of ABC zigzag. So if this occurs, we want to take a short trade. How do we trade it short? Let's just say, for instance, we go below here will be a strong confirmation, and we want our stop loss either above this high over here or above this high over here. So we're short in the market. What we're also saying is there's a possibility that this might be an A, B, C correction. That's why you may see me write stuff like 1 or A, because we won't know. This could be a 2 or B, because we don't know. And then the next move will give us the clue of, is it a wave 3 or is it a wave C? So for our insurance thinking, risk adverse thinking, capital preservation thinking, protect thy capital thinking, we assume, firstly, it's a wave C. But know that we don't know. Let me say that again. Know that you do not know at this stage. And there is no way of knowing. So this is one of the things, right? Most people go, yeah, I'm looking for certainty. I want predictability, But what we're looking to do is get consistent, predictable, certain results in an unpredictable marketplace, which is the market, like Bitcoin's price. Whether it's the euro dollar, whether it's gold, whether it's oil, whether it's stocks and shares, this psychology applies. And the sooner you can get your head around it, the better. So what we're going to do instead, rather than trying to pretend that we know, because you might say that you know and it unfolds exactly as you anticipated, but at this moment in time, like at this moment, if this occurs, we don't know. So I'm just going to emphasize that point. We don't know. And anyone says that they do know, they're lying, because they don't know, because anything can happen. So what we do is we say, let's now go, this could be a wave C. If it is a wave C, we're probably going to get a follow through to the upside. So what should we do? Well, let's protect our capital. Let's take some early profits and exit some of our position with a trailing stop loss, and move out the rest of our stop loss in the second half of our position to break even at the entry point. Right? It could be something along those lines. So we just minimize our capital exposure. But now we're saying is the market will unfold and reveal how the crowd is feeling. And what we anticipate is likely to happen, really looking at that weekly momentum, sideways to down for 4 to 6 weeks, is we are likely to see some type of pullback and then continue getting that follow through to the downside, and then a wave 3, and then some type of corrective wave 4, and then a final wave 5. And then if this happens, what would typically happen next, right? So I'm just going to play this out and then we'll wrap up, right? We'll wrap up. I'm just going to go back into a daily chart. I think these drawings might be on a daily. Yeah. So now we're just going to, so just to put things into perspective, when I'm talking about all of these movements, we was on an hourly chart, so it's quite intricate. So you can see all that we spoke about was this, and we're comparing it to this. So I just want to wrap up with, if this 5-wave move plays out like this, that's unlikely to be the end of a correction. Why? Because corrections take a certain amount of time. It's like if you were sprinting and running for the bus and you was running, giving you 100%, and it was 100 meters. At the end of that sprint, you're going to need a rest period to catch your breath. You need that oxygen to get rid of that lactic acid and then recover. And then if you need to run for another bus, you can. That's sometimes how the markets, well, pretty much how they respond. We've had this sprint and we're due for a rest period. And if we get the first rest period, we want to know what is the most common, typical, high probability kind of rest period. I'm going to draw that out for you in a logical, mechanical, non-emotional way. So how we do it, I'm just going to finish up on this because I probably went into more detail than I was planning, is I'll just draw it like this. I'll just do it very, very high level because I know there's a lot of noise on the chart. I like to keep my charts clean, so I wouldn't normally have it like this. I'm just going to draw from this low to this high. I think the high, I can't even see it. I'm just going to have to draw it like this. Okay. The typical price retracement is 50, 62, and 78.6%. That's a typical correction. And it's often common as a guideline, not as a rule, with Elliott wave, corrections tend to end around the wave 4, the former wave 4, right? So, and how long does it typically take? That we can also measure as well. And this is valuable information because it's the high probability outcome, not guaranteed outcome, just high probability. So what's likely with Bitcoin, if this ends up being the top of the fifth wave, is sideways to down till maybe even early June. Like early June is the most typical. And any mistake that I made in the past was not relying on this and getting caught up in the news, right? The news, the FOMO, because sometimes how even YouTubers, I know I'm on YouTube right now, but it's too much emotion, right? There's fear, uncertainty, and doubt. There's fear of missing out. And then that's why people buy at the top and sell at the bottom, which is not good, because that's how you lose money. People buy here because they missed out here, and then they go, right, I'm not going to miss out the next move. And then they buy only to see the market move down. That's very common for wave fives because it's called panic buying. What's most typical then is some type of A, B, C structure, right? And that's what we're looking for. Some type of A, B, C structure. And I'll just change this to an intermediate wave count, just so it's the same color and size as the red, so we know what we're talking about. And then if this occurs, I think I'm getting ahead of myself, but this is the plan. Unless there's other information that occurs that tells me otherwise, this is the high probability outcome. Why? Because the weekly momentum, we know we're due for 4 to 6 weeks sideways to down. Price points, we've hit key Fibonacci price points. Pattern position, it looks like a 5-wave structure. So if we get that first leg to the downside and it's aggressive, then that gives us a massive clue, especially if price goes into this range and below this point over here, like basically the swing low. That's going to give us a lot of confidence that a bigger sell-off is occurring, and we should get a correction that's bigger than this former correction and bigger than this former correction. So it's a macro correction. So we got this as a move up, and it'll end up being a wave 1 or A, and then we got a big macro correction, which is a wave 2 or B. And then finally, if this occurs, and it is still an if, because we don't know, right? We don't know. We just have to go with the probability. It would indicate that this is, in fact, the beginning of a new bull run, potentially. This is the first correction, which is a retest of this low. And sometimes it can be quite extreme at the 78.6% retracement, which is a typical maximum correction. And then what should we anticipate if this occurs from June onwards? Well, it's a continuation. It's the next sprint. It's a continuation of the former trend, right? Hopefully that all makes sense. There was a lot of detail there, I know, but if you've got value from today, like, subscribe, hit the bell notification, share this video, even just the macro part that we covered at the beginning. We are due for a top. The bus is running late, right? The top is running late. We were due for it a little while ago, and we are anticipating that sell-off, and it's likely to occur. Never guaranteed, just very likely. So let's finish with a quote. It's W.D. Gann, one of the forefathers of technical analysis from back in the day, over a century ago. And he said, a successful trader, that's you, studies human nature and does the opposite of what the general public does. So when there's the most amount of fear, which is typically at the end of a correction on the downside, you should be buying. When there's the most amount of euphoria, optimism, fear of missing out because of that wave 5, panic buying, you should do the opposite, which is selling, right? But we want a practical, objective way that's non-emotional to do this, to study human nature and do the opposite. And by far, the thing that I found to be the best, there's lots of, there's moving averages, double tops, triple tops, head and shoulders, cup and handles, there's patterns, there's wedges, there's flag formations, and there's lots of different things, support, resistance, etc. By far, I found, maybe not the easiest to learn, because everything in life is difficult before it's easy, is Elliott wave theory. That's what we use today, but it's to study human nature and crowd psychology almost in a mathematical, objective manner. Combine it with some momentum indicators and Fibonacci price ratios, and then some Fibonacci time ratios. All of a sudden, you have a very strong formula that gives you a strong edge against other players in the market that should allow you to win long term. My job is to help you compound your way to financial freedom over the next 5 to 10 years. So stick with me. We're going to be doing some very interesting things over the coming weeks, months, and years. So we'll keep a close eye on Bitcoin and see how it plays out. But right now, my position is looking for, if it plays out, high probability short trade opportunities, unless the price action tells me otherwise to change my opinion.